Finance Minister Enoch Godongwana's medium-term budget policy statement will provide markers to the medium-term development plan that the Government of National Unity partners have agreed on, and so give insight into how the state plans to achieve a 3% growth rate. That's according to Agriculture Minister John Steenhuisen, who spoke to the investors at the 11th SA Tomorrow Investor Conference. Godongwana will present the MTBPS tomorrow. He's expected to reaffirm the government's commitment to reducing its debt burden to more sustainable levels and report progress on achieving the spending curbs it has promised. That's in addition to providing detail about government's plans to attract a private capital into infrastructure projects that will enhance economic growth. Electricity and Energy Minister Kgosientsho Ramokgopa has inspected the facilities of X-Energy. The U.S. firm develops a small modular nuclear reactors, and C5 Capital, which is led by South African Andre Pienaar, holds a stake in the firm. Ramokgopa used the visit to assess the reactor's capabilities. That's according to his office. This comes amid government's plans to procure 2,500 megawatts of new nuclear generation capacity. Shoprite has bagged higher sales. Africa's largest retailer has posted a 10.4% rise in sales for the first quarter. That's as it opened 68 stores. The firm's operational update also stated that the transaction to sell of the majority of its furniture business to Pepkor is progressing accordingly, and completion of that deal has been pegged at Shoprite's June 2025 financial year end. AngloGold Ashanti's acquisition of Centamin has moved a step closer. That's after the approval by shareholders at the court meeting and general meeting. AngloGold announced its bid in September, offering $2.5 billion for Centamin in a stock and share deal. There's only one more hurdle to the transaction: the sanction of the scheme by the Jersey court at the scheme court hearing. That is expected to take place on November the 20th. AngloGold CEO Alberto Calderon says the deal offers the miner the opportunity to add a Tier 1 asset to its portfolio, as Centamin owns Egypt's largest gold mine. The Vodacom massive merger has been dealt a blow. After an extensive hearing, the Competition Tribunal has moved to block the plan, which would have created one of SA's largest fibre providers. Massive is Remgro's fibre business, and Vodacom was aiming to take a 30% stake in it, with the option of raising that to 40%. The parties were banking on the tribunal to greenlight the deal after the Competition Commission had recommended that the merger should not proceed a year ago. Orion Minerals has appointed Nick Forshare as a project director to manage the completion of its flagship Prieska copper zinc project feasibility study. He will also oversee the project execution. Forshare has extensive global experience, which includes roles at ERO Copper, South 32 and Rio Tinto. CEO Errol Smart says he is a fantastic addition to the Orion team as the firm moves towards the development phase at Prieska. Vunani says it's had a tough start to the year. The financial services company has posted a 4% drop in revenue. It cited a poor showing from its fund management and advisory services units due to a tough economic environment. Headline earnings per share for the period more than halved, but the firm is upbeat about the road ahead and says it's in a position to benefit from improved domestic prospects driven by lower interest rates and expected economic growth. It's added that this should see an improved performance and profitability in its operating businesses. Challenging, that's how Salungano has described its first half. The junior coal miner has reported a 30% drop in revenue and a much wider headline loss per share of 90 cents. That's as the group continued to operate with just one Eskom contract and its finance costs rose. Looking ahead, Salungano says it remains focused on navigating the difficulties and stabilizing the business in the second half of its financial year. ENX is expecting a profit bump. The industrial group says full-year headline earnings per share will be between 77 and 87% higher. Although when viewed on a continuing operations basis, HEPS are forecasted to fall by as much as 16%. That's as the group sold off extra to Nedbank during the year. And on the data front, annual growth in broad money supply increased to 7.3% in September. That's from 6.1% the previous month. Meanwhile, private sector credit extension slowed to 4.6% year-on-year in September. That's from 4.9% in August. The better-than-expected growth was driven by strong demand from the corporate sector, whose credit makes up more than half of total PSCE. In company news, further afield, BP has reported a 30% drop in third-quarter profit, weighed down by weaker refining margins and oil trading results. Here's more detail in this package report.
BP reported a 30% drop in third-quarter profit. It fell to $2.3 billion, its lowest profit in almost 4 years, but smaller than expected. BP's sticky quarter came during a slowdown in global economic activity and oil demand, particularly in China. It raises pressure on CEO Murray Auchincloss. He's vowed to boost the firm's performance, with investors concerned about its energy transition strategy. BP shares have underperformed rivals so far this year as markets question its ability to generate profits, with the stock down 15%. Auchincloss has vowed to focus on high-margin businesses. He's distanced himself from the strategy of previous boss Bernard Looney to rapidly expand renewables. Reuters reported earlier this month that sources said BP had abandoned a target to cut oil and gas output by 2030. The company has also scaled back its low-carbon hydrogen investments and plans to sell its US onshore wind operations.
Sticking with international company earnings news, in the aviation sector, German airline group Lufthansa's third-quarter operating profit also took a knock. This as its flagship brand struggles with low yields, competition with international airlines and spiraling costs. Let's take a look.
Lufthansa's third-quarter profit fell 9% as its core brand struggled. The German airline group reports operating profit of $1.41 billion, largely in line with analyst forecasts. The third quarter includes the busy summer months and is usually the strongest for Europe's airlines. But rising costs, unpredictability linked to the Middle East crisis and plane delivery delays all weighed on results. CEO Carsten Spohr also blamed punctuality issues at the airline's German hubs. Lufthansa's passenger airlines generated an operating profit of just under $1.3 billion in the third quarter, down on a year before. The drop was driven mainly by a more than $250 million decline in the results of its core brand, Lufthansa Airlines. Analysts said Lufthansa also saw a slower recovery in corporate travel spending. The carrier has complained about its struggles to compete with Chinese carriers still able to fly over Russian airspace. The group has launched a turnaround program at its core brand as it tries to recover after a difficult year to date. Lufthansa has already issued 2 profit warnings this financial year as it deals with costs tied to strikes. Looking ahead, the company confirmed its outlook for the full year as it aims for group operating profit in a range of up to $1.95 billion.